Alright, good morning everyone. Today is Tuesday, July 15, 2025. As you can see this morning, we have the CPI numbers come out. This stands for Consumer Price Index. Now, I'm not going to behave like as if I know what these numbers mean or what do they represent for the economy, because I'm not an economist, nor am I licensed to give anything here on this live stream, so just be wary. Everything I say here is my opinion. I'm just going to double check to see if I'm live. Yep, so it appears to be that I am online and live. Okay, so once again, 8:30 news, we had CPI, core CPI numbers come out. Let's see how's that affecting the markets this morning. So what we have here going to be looking at CFDs again, because they're using them for my live data. Yesterday I left the live stream a little early in saying that we will be hitting Asian highs. I didn't say until what time, but we would have been hitting it before the market closed today. I would have preferred that. If we go to MNQ, right, trigger this, you'll see that this line here that's marked in yellow, it ended up being hit here around pre-PM session, so like around 1 o'clock, early 1:15. I had left the stream coming back here. I had left the stream when price was like around here consolidating. We were discussing about that potential BPR level, see that sell side and that buy side. This area was balanced. Price came back down here, provided SMT, and it would have been a nice entry for it to go back upwards. Then it retraced back here again with an OT entry from this low to this high, so you could have accumulated more. So that's 1, 2 entries, and then the initial entry, which was the turtle soup that created that New York AM low, kind of make it rally back up, consolidated here. As you can see here, we were discussing about that earlier, that being maybe time distortion, and then the smart money wasn't ready for it to move up to that direction yet. And after New York lunch, we rallied up a bit, traced, right up again, and then we eventually ended up hitting that Asian buy side liquidity again during early PM session, pre-PM, and then now we seem to be still creating these new higher highs. I was aiming for these pre-market highs to be taken, and it did around the CPI numbers came out. So this is still behaving very bullish for me. I'm anticipating seeing new higher prices, new stock market highs. So it'll be good for your portfolios if you're holding long term. Now, intraday, what I'm seeing right now is also, well, for the week as well, I'm also anticipating to see a higher week form, like a higher candle. Let me disable this real quick. Let me go blind for a moment. Okay, now that annoying sound is out of the way, I'm anticipating seeing the Sunday opening, open, low, and then just shoot up higher for new higher highs. You see that there's nothing else here that's stopping in its way. It's because this is new stock market highs. The market has never been up this way before, so it's at its peak, and you can continue buying long until you're proven otherwise. I should probably move this with my markings as well. I usually like to take these just in case with me. So if you see this right now, we disable this and we go into our weekly chart. See that it's printing I think what they call a golden candle. You see that we opened, dipped back down, discount just for a little bit, boosted upwards. Now, I'm gonna go ahead and update my marking so you're going to be able to see that live. Okay. didn't quite break down these lows. So this is straight up a low high, higher high, the breaker here. So from this high form, going back down to the sell side delivery of things, I would have liked for this to be anticipated as a premium array. But seeing that, higher time frame wise we're heading up higher. And don't forget, we're also dealing with the most heaviest long position based on this seasonal tendency. Oh, because that in the curve, look how quickly it reacted upwards, and then now treating it as discount. So what else? What else? We're seeing this occur. Here we have a high, low, lower, low. Now that's a symptom of a dealing range right there. This low to this high, and it's creating new highs now. So I'm gonna rebrand this. What kind of dealing range is this? Type 1, no? So we anticipated it retracing back down to this guy before it ended up going up high. Oh, excuse me. That's it. It's for the weekly. So we're on this premium side right now. I think I mentioned on the previous stream that I really don't like when prices are making new higher highs, because there's nothing else to refer back to for premium levels. It's just gonna be in a new zone, and when it's in a new zone, because there's nothing to refer back to. I don't know where my stepping stones are. Here, open. See, looking for the daily. Open here. Create the low of the day during London session. Expanded higher. Retraced for a bit during New York AM. Expanded higher. Consolidated during lunch and PM. Kind of created that retracement. Let's see if it's like a TGIF kind of deal. Have like a 20 to 30% retracement on its high of the day. I think it's, oh, here it is, perfect. So 20%, yes. 70%, no. So we did have that, and then in the middle I would consider that the event horizon. So yeah, so it ended up hitting around 75% back retracement from its high of the day. So now it's just a matter of seeing how will we behave on the on today's date. So we have 12 a.m. 12 a.m. There we go. This is the can. No, this is the can. Again, we have an open low of the day around midnight. Expand higher. Trace. Expand higher. Now when we expand, we're either going to retrace, expand to retrace, or expand to reverse. In this case, we expanded to retrace a bit, and then we're expanding again, so we're going to be anticipating some form of consolidation, because that's the next process. Excuse me. You have a low high. Shoot. Okay. Yep, that's what I was eyeing right now. We have that other mini dealing range. So, because I see that here, I'm gonna go into the CFDs, and oh my gosh, look at all these labels based on yesterday's stream, huh? Excuse me while I clean up this one moment. That's okay, remove it. Yes, you can remove this too. You can remove this too. I'll remove this too as well, and remove this too. Okay, I want to make this chart as clean as possible, not just for you guys, but for me as well. Okay, so where do we see that? Okay, directions, um, quadrants. There we go. All the while, this guy is getting super duper extended too. Okay. But I really want to focus on this one, this dealing range right here. See how it's making higher highs. Where does that low come in? Ah, yes. Yep. Alright. So we've anchored ourselves nicely. And then, speaking of lastly, I'm going to enter the last 15U now. Okay, so we should be experiencing a small macro will occur around this time. So this whole area here is balanced. Okay, so we got two dealing ranges here stacked together. I would have been interested in seeing this as behave as a turtle suit below right here, but you'll see there's no session liquidity that's aligned to. Okay, and now we'll go back here. We'll take a look at what exactly has been left behind in terms of liquidity. So we had the pre-market highs taken. That's okay, we can go ahead and remove that. And then lastly, I think I have CMEs. Let's see here. We haven't quite left CMEs yet, have we? I'm quite interested here on the south side. We have 830, 828, 27, 29, 30, yeah. I'm interested in this south side here. So if we're gonna go up higher, this is what I would like to see, right? If we're gonna continue these higher prices going up, because of course we're in this all-time high right now, I would like to see a small retracement down, come down here, again give us that Kraken correlation. We aligned our dealing ranges. Once it crosses 25%, we'll take that trade. So where? New higher highs. I want to get myself ready just in case. Oops. That's 4. We'll aim for higher highs. So this is CFDs now. We'll go back to futures. $23,207 and a quarter, 203,208. Okay, so that's the whole thing. $23,205. Not quite there yet there. So I'm gonna mark that for now. So that's the business. All these lows here, unfinished business. So we'll see if price will be dealing with those. And because we have our dealing ranges, how low can we go? We can go down to right here, maybe down to equilibrium. Okay. Remember, we're splitting this into one half. This whole thing is discount. This whole thing here is premium. But you can, if you subdivide this, so we'll take high to low, divide this event horizon, and below event horizon is discount. Above it is premium. Same thing for here. Premium, discount, premium, discount, and premium, and then discount. Okay. And then again, listen, I'm not in the business of teaching. That's not me right now. I'm literally just, you're literally, if you're here, it's because you want to see how someone else also interprets the market, right? You're not here to learn. You're just here to watch and be entertained. Okay. Open. Now, if you want to get tighter than this, how tight should you go? Well, you start doing something like this. You start looking at, well, it's 931, so will we see that sell-off down to CME lows to accumulate more longs? See. In the meantime, that's what I'll be looking for. Ready? We'll be looking for that open float. So we got 7 to 8. Oh, look at that. Dealing range. Low. High. Oops. Let's do quadrants and then let's do yellow. Okay. And then we'll reverse this. So as I was saying to you guys earlier, maybe we can see a retracement back down to CME lows, get that SMT going, and then aim for higher prices. So that's kind of like what I'm currently looking at right now. So, I mean, the market can just keep going, you know, higher and higher and higher. Doesn't need to retrace all the way back there. So we got that open float from 7 to 9. We got the open float attached from this high. See, we reached external liquidity. Okay. So because we did that, I anticipate that going down further as well. So there's a couple of things, right? A couple of confluences. We have a candle high, then we got the 8 to 830. We already did that. But just to show you a quick study, we'll do a high to low. High, low, higher, low, higher, high. That is a type 2 dealing range. Yes. These lows are again suspect. We will go high. Okay. So the open float is here too, but that was until 9:30. And then we will reach 9:30. What is the new? That was price range. Let's see. Low to high. So we have a tiny little breaker here. Let's see here. 2, 1. Here we go. Low to high. We got higher high. Attach open float. That was open float, and now we're going to refer this to a 10. Before I would have loved to align myself with this low for it to go up higher, but you gotta always align it with some kind of session liquidity, you know. Okay, so it's approaching that CME low that I was mentioning earlier, and we'll see. Will we be receiving that SMT divergence? So we have that low here, and this is US 500. It's tapping the lows here for US 100. I need to know what candle was that. That was the 830 low. Interesting. So where does that low come in? That low comes at 22,977.7. So we made a low, higher low there. Same thing as here. Okay. And same thing as here too. Okay, so there's no cracking correlation just yet. Everything's working just fine. Again, it's 22,976.8. That low came at 22,977. So that's a one handle difference, but still didn't tap it nonetheless. Same as here, US 500 barely tapped that low. So we're looking at 6,200, 6287.1. Didn't reach there yet. I'm also looking at these charts as well, at a different source. Sorry, I can't fit it all on one screen, but it's not tapping there either. So, let's see. So if it gives you the same reaction, right? But if we look at this structure, this swing high, this swing low, if there's some form of SMT, I would be interested in seeing it retrace a little to premium before heading down to its original direction. To 940 yet? Nope, not 940 yet. Okay, we're also missing one more. Right, we have 15 U's. So we got 45s. We got the 915s. Okay, 930. 930 would make this big daily range right here. 930. Sorry about that. That's the 915. Yeah. We had this range here from this high to this low that was balanced. Okay. There you go. Balanced to go what upwards. So we have turtle soup here again, but failed because again there was no session liquidity to refer back to. Now look at this. We went back. We didn't really tap the lows just yet. We retraced back up, only to head back down lower. Okay. Now we're seeing a dip into that daily range. Okay, but are we seeing that same dip occurring on US 500? Yes. So everything is in everything's working as it should. So if it's not going to hit the CME lows, where else can it refer back to? Well, if we enable our liquidities, right, what's been left, CME lows we're taking, London lows is next. Okay, after London lows, we still got the 12 a.m. lows occurring. So let's go back out here. London lows approaching. We also have turtle soup here, but there's no liquidity to refer back to. This is all relevant until 11:30. Yeah, I believe I zoom out. Yeah, it's so relevant here to 11:30. Okay. Oh yeah, London low, sorry. It's just a matter of waiting. See, and this is what always had me confused when I was first learning out, and I still kind of can, but I mean, it's always about figuring out where is that the most current daily range that you should refer to. Because look, we just created another one from this high to this low. We ate up all of this, both sides. Like, which one can we take? But it's when I started aligning myself up with time that I start seeing that you can start anchoring your daily ranges. You don't have to move them all the time because they're stapled to a certain block of time. So also looking like now from these lows. Okay. I'm still feeling a little bearish. Really would like it to aim for London lows right now. Not, I mean, well, not now, but you know, we'll be heading down there. Let me step out real quick. Okay, so I'm back. So again, right now, if you've just joined the stream, what I like to see is a little bit of a retracement for it to go back up, to go down lower, aiming for London lows right now. There's unfinished business there. Then we also have MNQ here. We finally can look at our regular trading hours to see exactly what in the world kind of gaps are there today in terms of opening range gap, and how will that help us dictate whether we're going to have high resistance or low resistance liquidity release. Here we have one, two, where's the third one? There you are, that was that other one from yesterday. Really small. So I'll keep these two, refer back to this, make a close, okay, and then open. Open up here, and then we'll do a reverse. Okay, very good. So we have a low to high. We could take our calculators and like subtract. We have 2300, 23 zeros, no, 23, 200 point 25 minus 23 028.00. That gives us around 172 candles. So this is good. It is a healthy environment for low resistance. We'll reverse that because the close was down here and the opening was up there. Consider that a premium opening, so treat this as a busy. We also have our electronic trading hours opening range gap, and that's also looking like a busy as well. See that close to open. So we'll also see how they will react down to here, treating them with a gap. And then we'll see how else we can be anchoring ourselves here. Let's head back to CUS 100. Let's see how we have reacted out these lows, by the way. Same lows reaction, low, lower, low, low, lower, low. But let's take a look at a deeper close look at what we're looking at here. A low broken here. This high wasn't taken. We'll refer back to this high. Still do want to see lower prices to London lows. We don't have a dealing range anchor to it just yet. It's interesting to see here, 940, 45. Okay, 945. So this is the move, 945. Right now it's equilibrium in this dealing range. So that could be all that we need. So as soon as 945 hit, we were here. As soon as 945.01, that could have made that low, going up to the high. I'm dissecting this candle. We had this dealing range from this high to this low. So even if it just went up to equilibrium, right, and sold up further to London lows, that would be a good trade. And we can probably even look at the seconds, which I mean, listen, I don't like. Can you imagine looking at the seconds through here and trying to dictate whether you can take a trade here or not? You can even compare the highs here. Let's see here. 13. This is MSU. One moment, guys. No, this can't be from this low to this high. Set this to black. I mean, the proof is in the pudding. Quadrants. Okay, close down there. I'm trying to see if we can perhaps see another dealing range here. Sorry, as you can probably hear, someone else needs attention. But yeah, I would have been quite interested in seeing this returning to 25% to sell down lower. Because this is a low high, and I believe if we compare this to the US 500, so we have that dealing range high to low. Yeah, high, low. Notice that reaction. Did it react up 25% equilibrium like this one did? No. What else is here that exists to support our quants? Well, we also have this civi. Okay, civi here. No civi here. But what made me so interested was the fact that we created this dealing range. This one went up to equilibrium, but this one didn't. Okay, so ES is stronger right now to go down lower. So if we're still looking for scalps, right? Like, I mean, hey, this is one idea. Dealing range up to 22,991.6. The high comes here at 22,991.4. Okay, you would have been stopped in. You wouldn't be entering here. But let's see if it was sold lower down to London lows. That would have been the interesting target. Let's get our minds out of that, because we could talk about hypotheticals, but they don't seem realistic either. Because what if the broker doesn't stop you? And okay, yeah, that was a little interesting, something to point out too. Okay, we got the macro 950 to 1010. Price will be reaching out to either an inefficiency or liquidity. Speaking of inefficiencies, where is the inefficiency right now? Well, we take the 9 to 920. Taking that 920 to 940. This whole thing here is in an area. So we look for inefficiencies. Yeah, I don't see anything here except for this gap. Maybe an inferred fair value gap here. Yeah, I mean, you can also look at that. That was aligned with equilibrium earlier. Right, we take the size of this low. Above equilibrium is premium. Take the implied fair value gap. Something there, head down lower. We have a little mini time distortion happening at a time where we should be seeing an expansion based on the macro. I've also been seeing that the bonds are continuing to drop while the interest rates are heading up higher. But if we take a look at the dollar, see it's rallying up right now. I've also been looking at that as well. So if the dollar is going up, how do you think that's going to affect the stock market? We're looking at risk-off scenarios. So the stock market is going to have a difficult time to also make higher highs. Not that it can't, it's just going to be struggling. Do we see it struggling right now? See that little struggle? See that? Oops, don't want to let that go. Now is also a good time to question too, like where is our first percentage fair value gap, right? If we had opened here at 930 and we're going down, where is that first percentage? I think I see one down here from this high to this fair value gap low. Fair value gap high, fair value gap low, it's a little imbalance. So if we take that market up, okay, set it to orange, that will be our first percentage fair value gap right there. Okay, that's in the form of a CIBI. In the form of a CIBI. Let's mark that up in the futures market. Oh, look at that. We don't see it here on MNQ. But we do see it here on CFDs. Huh. 934. 933, 934. Yeah, no, we're not seeing it here. Yeah, it traded above it. Okay. So what could be our first fair value gap? I don't see it, guys. I don't think we have a fair value gap today. Not even this one, because look, during this sell side delivery leg, we traded down back up. This is balanced price, including the wick. Coming back down, that gap is in close line with that wick. This area is balanced. Okay. Then we have this forming. Wow. Volume imbalance. I don't see it today. No first percentage fair value gap today. Wow. And look, if we let that CIBI open, how do we react of that CIBI? On that, right? Did we do the same for this guy? Including the volume bounce? No. This one we completely rebounced. This one we didn't rebalance at all. So This high should be protected. Going down for a low, traded back up. It didn't trade. If that's our cracking correlation, that we're gonna be anchoring our I'm thinking of something here, guys. Yeah, it should have been something like this. Quadrants. Goes down below 75. We trace back up to 75. Barely tap 9.4.6. So lower. Lower to where? Here. So I mean, this is slowly approaching London lows, and this is great, guys, because that's kind of like what I've been telling you, that if it's gonna keep going up to make higher prices, we'd first like to see it trade down to either CME lows first or London lows, and because it went back up here, kind of almost wicked through it. Notice that it went up only to retrace a little, and then ended up digging further to that CME lows. But there's nothing to worry about because everything is pretty much well, how can I say it? They're working in tandem right now. So anticipate the moves manifesting lower to London lows. That's kind of be our next interest. And then kind of like discussing about that slingshot effect, I want to anchor my A leg here, stretching it back to the B leg up here. Why here? Because that's where we showed some kind of a SMT divergence as well. We made a low high, lower high. Okay, so that would be our B leg, and it's also they're in an area of an inefficiency where CFDs showed, but futures didn't. And so then we would have used that 25% level to head down lower as soon as it had crossed from it, but it didn't trade it back to it. So this is just tells me that it's probably really weak, and we'll start seeing expansion lower to London lows very soon. Especially because we're also still in the macro as well. So, but the reason why we didn't take it is that A, not only does it go against my, I guess my risk tolerance right now, even if it is 200, getting it down to something like this, sure, it's a 2.6 RR, return. I'm mainly focusing on 40s, 40, something like this, 40 candle stop loss. I wonder what everyone else is kind of looking at right now. Excuse me. It's still struggling to get down there, but that's where we're heading. Now, heck, the reason why I was also blowing up accounts was because I wanted to get on everything, like literally everything. So I would want to get into like a micro scalp here with like a two handle. Well, at the time it was forex, so I was trying to look for that one pip stop loss. So short, let's go because it has to go down short. But over time, I realized overexposure in itself is also high risk. You're not always gonna get the best fills. Stop loss will get disrespected if it's that tight. Then you'll be paying commissions up the butt if you keep entering. So that's why I try to stay away from those now. The demon in my head still wants to get onto those and it tempts me so bad, but over time you gotta get a better control of yourself. See, look at this. Low, higher low, low, lower low. Okay? So if we're reacting up the same way on liquidity, this is something I've been back testing, right? We had these low, that's a point of interest, call it like that. Had the same reaction, low, lower low, low, lower low. See that in US 500? But if it starts behaving in a manner where it gives you SMT again, but it's not related to this liquidity, what do we mean by that? We have that low, higher low, low, lower low. See how that's also SMT? I've been seeing that as like a form of manipulation. So price is just going to scare up those weak shorts, right? Making them think that it's time to reverse. But it's only going to go up to either premium here at equilibrium or, yeah, 75%. But it still has to go down to London lows. Why? Because we still haven't had that cracking correlation just yet. So there's still a lot of selling. The sell program is still in place. As a matter of fact, I'd be interested how it would react off the first percent of fair value gap that showed on CFDs but not on futures, and to see how that would behave as well as a premium array. We also got to look at what's been bounced, right? It's already past 10 o'clock, so 10:07. We got this going on right now. Let's see. Let's look at it here. And let's do our new studies. So it's 8 o'clock, right? We have that low, high, yeah, higher, high, high, low. So we have a new leading range, right, to worry about right here. We'll keep this white. Call it 60 blue. And then we got the 30 U's that reacted off. So we have a right here. Let me disable this real quick just so I can get a better visibility. Right there. So we'll anchor ourselves to that low. See, if you were chasing price and we would have gone to that microscope there, 2 pips, 1% risk, see how easily would have been stopped out? So oh, I see. So we're approaching now the first percentage fair value gap on CFDs. It doesn't show in futures, so that's something that's interesting to take a note of. So we had this balanced price range here that we would have liked for it to have seen it fill quickly until 10:15. Notice that once we opened up at 9, once we opened up at 10, I'm sorry, did we start seeing a rapid fill down to these lows? No. Instead, it started to shoot up higher. So what could this mean? It could mean that we're retracing back up to premium levels only to go back down lower again. That could also be a possibility. Notice that we're not doing anything yet, just yet. We're not doing anything yet now. We're waiting, we're waiting. Not getting in on everything. Not anymore. That's changing. I wish I had people watching this so that I could just ask, like, listen, do you guys want some music? I can put on some music on right now for you guys too. And it's not gonna be rock and roll or anything like that. I'm not trying to get monetized here. So okay, so we had that we didn't have that rapid fill that I was telling you guys about earlier. So where did it go? Up to these highs. It's funny, huh? Okay, so we trade above the first percentage fair value gap. I'm still looking for price to reach down to these London lows, but we'll see. Just how in the world? So I'm also interested in these highs as well. So you can be looking at something like a OTE. See how that will react up to that level. See how we're there now, and look how it closely aligns to that high that we were talking about earlier. So definitely something like this would make sense. 20 handles. Look at that. Assuming that this high will be protected now. You could take the whole composition here, aim from this high, this low, make that your OTE. So down low. What is that level again? 70.05, 0.75. those lows. Let's put it to let's play it safe. Let's do 1 a.m. There's 101 lows, 1 minute and one. Let's try. Yeah, let's try this. Those. We're retracing back down to the first percent of fair value gap. Um, so we'll see what happens here. Okay, so now we have that 1015 print, right? What's going to happen next? We have the 945 with the high low. Okay, so we have a bullish daily range till 10:30. After 10:15, 10 o'clock, sorry. So it's extremely at premium right now. So I'm still trying out that theory that if we're probably gonna reach down to London lows. A mini macro is about to start too, by the way. So I'm interested in seeing these lows get taken, possibly reaching down to London lows. Something we also have to be wary about is the start of 10 o'clock to 10:30. This range to fill. We'll see. Let me put a market here. We'll see. Only time will tell, right? If these loads will get filled. But if you're just joining the stream, what will happen if we see these loads get filled, right? How are you feeling right now? You who's watching this video, watch someone analyze price action. How are you feeling? Is this giving you the jitters to see price behave in this manner? We ain't quite close now to fifth equilibrium just yet, so we're waiting for that to happen as well. We're also about to push 930. So when it approaches 930, right? What kind of new balanced price ranges will we see? We have here the 930 to, let's see here, 930 to 10, right? The high low is the higher low, high. What do they refer to as that? Where's my box? Come on. There you are, buddy. Okay, high, low, higher, low, lower, high. So this is still market contraction. So basically what that means is that you want to see the move stay continuing, kind of in that sense. Higher, low. This whole sell side to buy side is balanced, beginning after 10:30. So we'll see. High, low, higher, low, higher, high. Okay. You pretty much just see that as a favorite swing. U M I up. Okay. Now notice here, low, higher, low. If we take this range from this low to this high, is it a type 1 or a type 2? Okay. Something for you to check out. This high here. Where are my quarters? Oops. Hang on. Where's my other one? see the outline, but I don't, not letting me touch it. Hang on. There you are. Remove you. And see if we can get down here. So we have the 1030, 10 to 1015, that's a low high. Okay, we have a higher high, higher low. So this area from this height is lowest balanced. What do you call that? A balanced price range, but also a good breaker. I wouldn't like to see that get reached simply because we have already crossed this 25% level. So ideally I wouldn't, and we have crossed the 50%. Did we close below it or open below it? 22,985, 22,985.1. So I don't like this, that we opened at the exact price of equilibrium of fair value. I would like to see this continue to head down lower and close below 50 so that we can move this up to here. But I'm also very interested in this low to high because it's a type 2 dealing range, so we anticipate a reversal to form that down lower. Remember, the draw is down here to London low. That's where I really do think that we're trying to get at. And it's weird too because the way we open, it should just be low resistance liquidity, right? But for some weird reason, it's giving us a hard time today for it to get down there. It's not easy. You know, I did put this range here from OT to be like a hypothetical trade. Like, what would it feel like if you do something like this? Notice how many times it's just been meandering around. Wouldn't that make you feel uncomfortable or impatient or just like, come on, let's go? Certainly will for me. I'm just gonna step for the restroom real quick. I'll be right back. Okay, I'm back and still looking to see that fill occur. So London lows liquidity. I still. Oh, look at that. We finally closed below equilibrium. Huh. So I'd be happy to move that stop loss down here. Um, so it's 10:37. We should be the mini macro just finished again. So the next mini macro will be like around 10:43ish. That's when the next one will start. Something else I want to point out is this. MQ, notice that we also dipped down to CME lows, but look what we did: low, lower low. CFDs, low, higher low. Now isn't that S&T in itself on a positively correlated, instrument? CFDs versus futures. Because I was saying to you guys earlier that when things like that happen, I expect a retracement up to premium. Retrace back up to premium, OTE, based on this higher time frame, and so you would have anchored your OTE levels right there. 20 handle stop loss, and then see if it meets. See if it meets your London lows objective. Now the next form of closing would be up to here, 75%. So once it closes below it, I would like to see, you know, move the stop loss again. So let's say we're in this hypothetical OTE trade, right? Right now our stop loss is set to 25%. Why? Because we crossed equilibrium. So I'm gonna put up a little skull here to represent our stop loss. That means we killed the trade. We're out. Yeah. Okay. So once we cross this price again, this stop loss will be considered a see that? Oh no, hold up. Right here, 75% life one. So once we cross this 25%, you see 25% here. That's going to be our hypothetical stop loss. We don't want to see price retrace back up to this levels. Until it closes down to 75%, we see this black 75 figure. Closes down there. We're going to move the stop loss to equilibrium. We're not there yet, so we're not going to meet those conditions just yet. In the meantime, this whole thing would be very challenging to hold. I'm not going to lie to you. If I was in this trade looking to meet London lows, this whole zigzag up here would not make me feel comfortable at all. Because it's constant retesting of your beliefs of whether or not it's going to be heading down there. And that's where you have to be mentally strong in this. You have to push your mental fortitude and just be able to hang on. Like, you believe it's going to go down there? Okay. We're going to head down there. Nope. We're going to head down there. Nope. We're going to head down there. Nope. We're going to head down there. We're going to see what happens next, man. It would be very interesting to see the 1050 to 1110 macro kind of give us that speed, that spooling of delivery down to London nodes. Well, we'll be yet to see that. Um, we'll be interested in seeing that soon. We're at 1043. Look at that, we finally closed below EQ, so it's safe to put your stop loss a little bit above um, equilibrium. So you want to look at that wick there. I am so sorry, I got really passionate there for some weird reason. There you go. So now we don't want price to reach these levels before we get stopped out again. Notice that we still haven't broken out of the opening range from 930. Okay, so that would have been the full pull. So, okay. So still, something of a contrarian trade, 1.46 is a hard scalp. I'm not gonna lie to you. That was a hard scalp. That would have been a hard scalp if it was. Are we also seeing a new? Okay, yeah. So now we're seeing something new. So now we're taking the 930. We're taking the 1015. Sorry, 1015. Can you move? Yeah, we'll move this guy. High to low, lower high, right there. So this I would be treating as a what? Failure swing or a mitigation block. And we're looking for price to reach down these lows, wick on it, see that how it's wicking on it, and possibly use that as a premium array. This from this high to this low, from this low to this high is balanced. So we could let price wick up there, but ideally we would like to see it get down lower. And the 1050 macro is about to begin. So I'm really hoping we're going to use that time factor so that we can see price dive lower down to London lows. But only time will tell. We would have been already broken even, but again, we set our stop loss to equilibrium from the range of this low to this high. Right? Because if the idea is that we're trying to reach down to London lows, we want to ideally see some form of slingshot effect where we're anchoring ourselves to something and reaching back all the way up to where there was some kind of cracking correlation or just some kind of extreme premium array or an extreme level, in this case OTE. I didn't see that, how it would react to go down lower. Okay, so that's for idea. That's the idea. That's what we're trying to head at. That's where I feel like this is the unfinished business. So we'll see if it's gonna head down there soon. All right, 1050 macro starts to begin now. So will we see a spooling price? A spooling price lower. Will we see price reach down to London lows? We'll see. Man, how long have I been streaming? An hour and 40 minutes? Okay, notice that we reached back down to this low here. Very important. We have also breached down 75%, so it's safe to move the stop loss just a little bit higher. Oh wait, but would have been stopped out. Whoops. So that would have been the end of the trade for this one. But if it wasn't tapped, then that you would have moved it down here to 75%. Aiming for that London lows, 1053. Oh, man, this is hard. This is hard to wait. I'm not gonna lie to you. That's London lows. Oh, there it is. Okay, let me take a quick screenshot. Oops. Let's refresh the page. And 1054 right on the macro. Hit London lows. And I guess it was one of the most difficult things to watch in real life, in real time price action. Now imagine trading it, seeing something like this unfold. Definitely a lot challenging. I'm not gonna lie. Especially on an instance where I thought we would be seeing high resistance liquidity. But I mean, honestly, yeah, this was a little difficult. But all in all, I appreciate you taking your time to watch this video. I'll be making a summary about it on Instagram, and I'll be posting it there, whatever, for the clicks. Other than that, have a good one. All right, the noodles were met. Take care.